money back guarantee. We have people that attend the 2-day on-site class on an annual basis. You dollar cost average this cost of this program out. Not only does it pay itself back in a short period of time, but over the long haul, remember, the way that people become the most successful is they continually go back and take refresher training, and they continually go back and sharpen the saw. So let's click back in on live market here. We can see our trade just topped out at our net 10 that we were looking for here. And remember, I have to stress that, you know, when we talk about discussing the trading setups, as I said, if you have a sincere interest, be happy to make a phone appointment. We can discuss it in a little bit of detail, but it simply is what happens is we have a lot of individuals who participate and simply just want to trade what we trade. So let me just walk you through here. We talked a little bit about the 3 steps of trading, and so this is a setup here that I went ahead and notated that happened here at the beginning of our trading session here. And one of the concepts that I wanted to convey here is the way to grow your account in a positive direction is not to stay in a trade for an extended period of time. The way to grow your account in a positive direction is become consistent and trade more lots. You know, the true holy grail of trading is thinking that you can stay in the top and bottom of every price move. And so once again, step 1 for us is we identify what we call the trading zone. Step 2 for us is in our entry strategy. We teach 2 black and white entry strategies. One of the entry strategies we look for is specifically a certain candlestick that is our proprietary criteria for that candlestick. I stress that once again because we don't use any Japanese candlestick patterning in the course of our training program. And that's a common misconception whenever I mention the word candlestick. And remember, your entry strategy needs to meet 2 criteria. It needs to be black and white, and it needs to be easy to understand. And a common problem with oscillator-based entry strategies is they're hard to interpret, and they give off a lot of false signals. And so once again, entry strategy needs to be black and white. So step 2 is after we plan our trade, we look for our entry point based on our entry strategy. And then step 3, profit taking, as I said, we look for anywhere from 10 to 20 pip trades. It's all based on market conditions. In the course of these presentations, we look for a small 10 pip profit objective so we can see a trade from beginning to end. Once again, the way to grow your account in a positive direction is not to trade more often. It simply is to trade more lots. So this particular setup, had we made a trade, this particular setup, had we traded 1 lot, would have netted us out $100 in less than 30 minutes. Had we traded 5 lots, we could have netted out $500. And so once again, and this was using strategies 1 and 3. So once again, what would you rather do? Would you rather achieve your profit objective, and would you rather make your profit objective in less than an hour, or your profit objective in 8 or 9 hours? And that's the problem with trying to find the top and bottom of every price move. So let me just start to wrap it all up here. One of the things I want to quickly touch on is the dynamics of a trading account. And just to make it clear for everybody, is that one is the unit that we get paid in is called a pip, and the value of a pip is $10. So if we look over here at this price gradient at the right side of the screen here, this price gradient is reflective of the exchange rate of these 2 currency pairs, which is the dollar versus the yen as they trade back and forth against each other. So earlier this morning when price fell from this point to this point, that was a 10 pip move, and so 10 times 10 is $100. So once again, the unit that we get paid in is called a pip. The unit that we trade in is called a lot. Requires $1,000 of margin to make a 1 lot transaction. Now think of a lot as no different than a share of stock. If you wanted to buy 1 share of XYZ, it's going to cost you X amount of dollars. If you wanted to trade 1 lot of USD versus JPY, dollar versus yen, it's going to tie up $1,000 of your money in your account. Does not mean that you're risking the entire $1,000. Remember, we're always risking the size of our stop. Our stop is always fixed, and on average, remember, we work off of a 10 pip stop. So the unit that we trade in is called a pip. The unit that we get paid in is called a pip. The unit that we trade in is called a lot. Requires $1,000 of margin to make a 1 lot transaction. Now there are 2 types of trading accounts in the Forex. There's one that's called a mini account, and with a mini account you start trading with as little as $250. In fact, when you get to phase 3 of our training process, the practice phase, after you attend the online class, this is the level that we want you to trade at. You're only risking or making $1 a pip. But it's so important to go directly into live trading, because one of the final common pitfalls for individuals is they typically want to start to demo trade. And all demo trading does is create bad habits. You know, here's the typical path of most people who pursue the Forex. The first thing they do is they go out and they open up a demo trading account. And then they spend countless hours on the internet trying to find as much free information as they possibly can. And so they piece together some type of trading strategy, and so they start to trade it in their demo trading account, and guess what happens? They make a little money, so they think they got it all figured out. The problem with this is they don't realize that everyone makes money in their demo trading account. Everyone. And the reason is we don't trade as if it was real capital. That's why we discourage people from demo trading. The only person that solicits demo trading is your Forex broker. So then what happens is they open up a mini account, and they typically blow through it, maybe a couple mini accounts. So by this time they're out of pocket anywhere from $500 to $1,000, trying to learn through trial and error. So then their Forex broker says, well, hey, if you open up an account or if you add more money to your trading account, we'll discount our training program for you. And so they take and they say, okay, I'll do that. I'm going to get training from my Forex broker. Remember, the way Forex brokers make their money is through transaction costs. Anything that they can do to stimulate transaction costs is to their benefit. So I always ask these top 3 questions, and I've interacted with individuals who've attended all of the top 4 Forex brokers training programs. I always ask them these 3 questions. Question number 1, in the training, did they use a real-time live market? The answer is always no. Question number 2, did they give you clear-cut information that says this is why we enter and this is where we exit, this is a strategy that applies? Did they give you clear direction and say this is where you can trade and why, this is where you can't trade and why? The answer is always no. It was a broad-based overview of how the Forex worked. And then the final question was in that ongoing support that they give you, was the individual able to evaluate how you were interpreting the information, give you back some constructive criticism, and more importantly, some direction on what to practice before the next time you talk to them, so that you could start to see some positive direction? And the answer was always, once again, no. So by this point, the individual is already out anywhere from $2,500 to $3,500 taking this self-taught trial and error process. There's a great saying in trading that says you're going to pay your tuition one way or another. You're going to pay it to the market or you're going to pay it in training, but one way or another, you will pay your dues. And it's statistically proven that when you pay it to the market, it costs you anywhere from 100% or more through that trial and error process to learn it through the school of hard knocks versus taking professional training. Professional training shortens the learning curve. Professional training pays itself back in a very short period of time. Professional training, unlimited professional training, gives you ongoing access so that your skill set continues to grow. And I can't stress that enough. Have you ever watched a movie a second time and seen it entirely differently than from the first time you watched it? It's the same way with the training process. The first time people participate in our online class, they had just enough information to get them up and running. But 100% of the time, I always hear it, the second time I attended it, I perceived the information entirely differently. Because it's a real-time market. You have to be exposed to the information more than one time. Remember, we all learn in the same process, and that process is via repetition. Repetition, repetition, repetition. So I was talking about trading accounts, and so we want you to trade at the $1 a pip level. Once you achieve your 10 positive trades in a row, then you can move on to start trading at the $10 a pip level. And to trade at the $10 a pip level, the minimum account size is $2,500. The average account size is $5,000. So with your $5,000 trading account, you can trade up to 5 lots. Now, a couple other characteristics of this marketplace is there's no round-trip charge. We only pay on entry. In other marketplaces, you may be used to paying a commission, and then you absorb the spread between the bid and the ask, and then you pay a commission to exit. In this marketplace, we only pay on entry, and that entry cost is calculated